Hi, welcome to Traders Club market analysis dated 21st of October. As always, let's start with the disclaimer. Anything that we discuss here, it's available in the public domain and therefore it should not be considered to be the advice for your trading or investment. We are simply sharing the information for the benefit of the club members. The first chart that we are going to look at this week is the chart of Google, the actual share price. The results were announced on Thursday, slightly earlier than anticipated. It was a surprise. Obviously, earnings were not as good as expected, and that caused quite a bit of sell-off. So some circuit breakers were triggered, and the actual share prices had to stop trading for a while, and they only initiated the trading again towards the end of the day on Thursday. But the sell-off carried on Friday as well, and obviously it was triggered by the overall market pullback. The current support is clearly defined here at 665.45. I think there's quite a significant support level at 660. It's a psychological level as well. Only the loss of that would cause for a retest of 200 period moving average at 639.74. Alternatively, we have the immediate resistance at 691, followed by 711.85 in the case of any rebound, but this looks fairly bearish for this share. As a result of what happened with Google, it had a direct impact on Nasdaq, which is a 100 technology companies. It's Nasdaq 100. From the technical point of view, it looks like a topping pattern of head and shoulders and the loss of neckline, and then subsequently the price actually rebounded back to reconfirm this previous support now newly formed resistance, and then we saw quite a bit of sell-off. So Nasdaq actually had the deepest pullback on Friday out of all indices. The concerning bit is temporary loss of this rising trend line, colored in blue. So the immediate support on the downside, it's located at 2658, which is a 50% fib retracement, followed by 2647, which is 200 period moving average. So it's 200 day moving average, which is quite a significant support. Alternatively, if the support confirms at these levels and we see a bit of a bounce back, the immediate resistance, it's located at 2713, followed by 2775, which is 20 and 50 period moving average also. Stochastics are showing a bearish crossing as well. S&P 100 daily chart looks quite bearish as well. The pattern at the top here appears to be a beginning of the formation of a triple top or a triple head. The significant support is still located at 1425, which is this blue dotted line. Nothing really changed, and I think that will be a next big battleground. The price actually finished on a daily time frame comfortably sitting on 50 period moving average. There was a significant sell-off, so potentially next week we could see a bit more downside or kind of a carry on with this inertia and the overall prevailing trend, which is down. The significant or a concerning loss of support of 1425 would be quite significant, and in that case the price would probably retest the cluster of this previous lows at 1395 level, and only a loss of that support we would possibly head for this 200 period moving average on daily time frame at 1373, but it's an early stages just yet. So this looks quite bearish. It looks like a triple top almost. On hourly time frame, we can see the same formation again, and in the very simplest terms, this blue dotted line support at 1425 must hold in order for us to stand a chance of any possible rebound and the retest higher. So very basically, support on the downside is 1425, followed by this quite a long way away down at 1395. There's a bit of an empty space here. Alternatively, if we see a price firming at the current levels, and possibly rebounding higher. Resistance on the upside, it's located at 1444, followed by 1449, call it 1450, and then subsequently 1452. So these are the levels. Indicators like RSI and stochastics are very close to complete oversold or oversold levels, and they're curling up. So a red flag for people who wish to short this. We need more confirmation. Okay, the volatility index is inversely correlated to S&P, and sell-off in S&P provided us with the long-awaited breakout above this falling resistance line, and the price actually closed at 1706, which is quite bearish for the market, so bullish for VIX. Bearish for markets. Support on the downside is clearly located at this 1330, 1350 levels, so we can see creation of higher lows, and this breakout is quite significant. The next resistance on the upside, it's located here at this falling 200 period moving average at 1789, followed by 38.2 fib retracement at 1884. If we see a further upside in VIX, it would indicate that S&P is selling off quite hard as well. So definitely one to watch. The next chart is a chart of copper, and obviously copper is a leading indicator for what S&P might do. This here looks like a consolidation pattern. It's sideways, and yet again, Friday candle looks very, very bearish. But we have to be quite clear. There is a significant support at this level, so it's almost like a multiple support levels at this 364 level. You have this falling support trend line. We have a fib retracement at 50%, and also we have a cluster of 250 period moving averages there as well. So there's quite a bit of support at this level. The loss of these levels could be concerning. It would mean more downside very quickly, so therefore the support on the downside would be located at 357. Alternatively, if these levels hold and the price rebounds, the resistance on the upside would be located at this lower retracements of for fib, followed by 373, which is 20 period moving average. So just keep an eye on that. This is the price of gold, or the price action of gold. Quite a deep retracement, currently supported by this rising 50 period moving average. It looks quite bearish. Probably the 61.8% retracement at 1703 would be quite inviting for a huge amount of people, and potentially provide a high probability long setups if it materializes, but we have to be careful. So the support on downside is located at 1703. If that fails, then we're quite a way down. Retest of this 200 period moving average at 1662. That will be quite ugly. Alternatively, if these levels firm up and we confirm this support, resistance on the upside, it's located at 1739, followed by 1764, which is 20 period moving average as well. Stochastics is very quickly moving from overbought into almost oversold territory as well. And the last chart today is dollar index. Obviously, sell-off in the markets provided us with a bit of a relief rally for dollar, but this still looks fairly bearish. More QE3 means more money printing, and therefore softer dollars. So even the indicators are creating a lower highs, and although this price rebounded from fairly significant support at 79 level, it's almost like a range bound. There is a significant amount of resistance at these levels above, which is psychological 80 level, followed by 80.44 and 80.67, which happens to be 200 period moving average on a daily time frame as well. So if I have to put this in the context of euro dollar, euro dollar must respect the support at 12800, the loss of which would be quite bearish for euro dollar. If we stay above and firm up, the dollar could possibly sell off further, and we could potentially see a little bit more strengthening in euro as well. So hopefully this was informative and beneficial. If you have any questions, don't hesitate to contact me, and hopefully you enjoyed it. Thanks.